Welcome to TradeTheMBI.com. This is John's Reports for the 30th of August, and as we near the end of the month, there was a strong response back from the North Korea missile over Japan. It seemed like it may have been a little more hype. The measured response from the administration, I think, is really what strengthened the markets. There was no dramatic, because what are you going to do? I mean, other than blow them out of the sky and attack North Korea, that you really don't have any other options. They're going to do what they're going to do. And the fact that it wasn't an escalation in rhetoric, I think, started the market higher. And at that particular moment, we just turned it around. We can look at it from intraday, and you can see how it played out. But we're still looking at a weak spot here. What the only advantage was is we had short-term buyers pop back into it, as well as midterm, but we're still fading from long-term buyers, and they may be even waiting until the early part of next month for the typical inflows that happen around the 5th, and that's something we usually look for in any given month. But it's been pretty lackadaisical when you consider a beginning of August. We were right around here at 68. We're south of that by a few points, but still holding on. Again, the ABM values here from a daily standpoint, 58 is the turnaround point. So sure, we've been below the green line, which has indicated, some short signals that developed early on. We had a turnaround setup that took place there, and we're still within that general turnaround. We just had very weak and lackluster support within it. I think the NQ is boded a little better than that and is much closer towards being at its regular peak and highs. So I think there's a little bit more of an advantage there. And that's been driving the market in general anyway. So, but they came back to these pretty close to the exact same thing the ES did. I mean, if you look at the broader baseline closes as opposed to the outlier lows, some of those are just carry throughs. Can't always rely on those. Wix is a real indication. The euro, once it was realized that the U.S. wasn't going to go off the deep end, they started selling into it because it's a bit out of range. Which is fine. I flipped this to, instead of the bar line that we've been showing before, what the value was. But going back all the way from, what was it, April, when we caught the beginnings of the buy down here at the 107, it's just been a straight up move with mostly the DOC cyan here being below red, and that's always been a strong buy. The only time it flipped above was right here. We had a brief breakdown before we turned around into another buy set up right here as we broke out for this most recent rally. It's pretty much just been super strong the whole way through. Does it make a lot of sense? No, because this is mostly central bank activity propping it up, despite the really weak growth in Europe compared to the U.S. It's an interesting play, but it certainly helps the S&P. The obviously cool down in rhetoric caused people to move back out of bonds towards securities again, and way overbought. However, still higher close at a ridiculously high level. And that's an indication that they believe that growth is going to be hammered. Now, obviously the hurricane is going to have an impact on that, but the secondary aspect of that is there's going to be a huge relief bill, and one way or another, you're going to have a quasi-infrastructure bill that will support the hurricane recovery, much like you had in Louisiana after Katrina, once it was eventually done. And that's actually, maybe not now, but in the coming year, could have significant growth impact. I mean, Texas was already outpacing most of the country, and this is only going to spur that even more, so that'll be interesting. It's also worth noting the number of cars in that are being destroyed that are going to have to be replaced, and or it's going to flood, obviously, the used car market, which has already been struggling. So there's going to be some interesting dynamics from what's going on just from a natural disaster standpoint. Now, oil, obviously gasoline prices are skyrocketing. That isn't going to impact the oil situation so much. It's just going to cause a short-term ripple in gas prices because we're still seeing continued weakness, dropping shakeout, no real improvement, at least from a usage standpoint, obviously with the hurricane, you're going to have a drawdown in the amount of refinery capacity. I think that's going to build some inventory, so it's going to be a little bit of a false narrative. But again, we're not seeing demand outstrip the ability of supply to be a point where we can say that we're seeing some robust growth. I know they've got new healthcare proposals that may be gaining some steam. And that actually could be assisting the market as well, because the potential of Obamacare repeal certainly would please the markets with the amount of money that would be saved, a couple $100 billion. That's pretty staggering. Now gold, people were suggesting that gold's run is done and that it's going to fall apart. I think that's a bit early. We had positive extremes. We've been a bit overbought for a little while here. We had the short signal coming right about here, just as we started to peak, which was an interesting one. So it's kind of moved very counter, and most of this, though, was the systemic North Korea situation. So those outliers happen from time to time, and not a whole lot you can do about it. When we had the other peaks over here, we had cyan underneath the red DOC, and no indication that there was any fade whatsoever going on in that particular case. The interesting part about that, and I talked about this on the Skype chat too, in looking at some of those situations where you have these anomalies, the steel moving below cyan for weakness, and then back above is usually the bullish. And even with the cyan under red, you can get some short-term fade situations. So you can see right here would have been a prime example of when it crossed below. We'd expect a little bit of weakness from the 122, and I think what the lowest you got down to was only 121. But as soon as it turns around and goes the other direction, with cross above, that's when you would look for a buy situation. In this particular case, you have orange moving below red and green in that crossing, so that's actually buy configuration from those. And here we have the daily. That was interesting because this, I squeezed it quite a bit because I wanted to show the other day when we had the dip down of the highs here, suggesting that we would return to the highs. We didn't quite get there in the early part of the day, and then we had the whole North Korea thing. But I did want to point out that we came right back to those highs that we were expecting to achieve. And even if you look at the lower levels, we hit them much stronger and earlier. Right about here would have been at the ABM level right here, which happened just at the close of the market. We peaked up to it, and then after market actually started to go. But that's what the target would have been from the previous day. And then, of course, we had the similar situation after the decline. Oops, I may have gone too far there. There we go. So starting up the day from its low peaks, we ended up with the buy configuration here with the orange moving below the green DOC, cross up into a new zone, likewise red turning up as well, and that started the process. We ended up with a little bit of weakness, and then we got a secondary buy that came in all the way up at the 50% Fibonacci point, and then we noticed that we had both the situations where the dropping low suggested a move to the highs. Now, lower highs, though, mean that you don't have to go quite as far, and we finally reached those. And then once we did, we started to see the lows rising, which usually calls for a retrace, except for the fact that we also started making new highs. And like I said on the Skype chat, as long as we were seeing even the slightest little uptick in new highs, it didn't matter that the lows were rising, because it negates it when both of them are going up. And in this particular case, we continued to make new highs, and that prevented any of these little short signals. Not to mention the fact that even when those came in, we still had cyan under red. We started to get the cyan above here as we started to get a reset, but it pretty much paralleled it and then just moved right back below. And coupled with that, we had the nice steel reset, so there were plenty of buyers upon the new setup, so that's why we didn't get much of a sell. Now, when we do, when we're starting to get some positive extremes here, we really still don't have a strong sell signal per se. So this can continue. I know it's counter to a lot, and that's usually what moves the market, counter trades. So I'll be sending out indicator renewals in that, and probably be sending them out tomorrow early so that you have no delay in having them ready for Friday. Hoping to have a couple of the paint bar changes that match signaling from some of these DOC setups where the extreme cases take place, so that you can see the conversion earlier, and I think that will be helpful. As always, though, trade well. We'll talk again later.